Hey there, everyone. Happy Wednesday, August 5th. Welcome to Chart This with Dave Keller. I'm your host, Dave Keller, coming to you from a still quite smoky Redmond, Washington. Hopefully it clears out here pretty soon. The fires, those of you that are not familiar with the geography of the Pacific Northwest, could not be much farther here. Eastern Washington is a long ways away and it's over a mountain range. So we're pretty safe from the damage that you're seeing in like Spokane, which is Eastern Washington. We're kind of in Western Washington. But smoke from fires this big can travel long distances. So basically we're getting, and we're surrounded in the Seattle area by mountain ranges on two sides. And so a lot of times the smoke kind of just gets in here and kind of hangs for a little while here. So hopefully it dissipates here pretty soon. Well, my son's soccer team practice canceled because of the smoke. They're doing a film watching session tonight. So that's good. Hope you guys are all staying safe, breathing clear wherever you're located. And thanks so much for tuning in here today. We're live streaming on Facebook, YouTube, and X as always. I appreciate those of you tuning in live. You are welcome to ask questions and drop comments on any of those platforms as we go. I'll try to keep my eye on the chat and answer a question or two as we go. If we don't get to your question today, we'll put it in the mailbag. We're planning an all mailbag episode on Friday. Friendly reminder, by the way, next 2 days, Thursday and Friday, going to be on the road going to Southern California for a soccer tournament. And I will be doing, I am planning to do a show, but they won't be live. We'll be recording them. I'll be doing them from the hotel. So just have to work around a bunch of other personal stuff, but we'll get to it when we can. But thanks for hanging with me on there. We should be back good to go. Monday next week, I'll be traveling. So Tuesday of next week will be our next live episode. But just make sure you're subscribed to our YouTube channel. That's where we'll keep you updated on any kickoff times and any changes to that plan. But thanks for hanging with me as I get through August. August is kind of a crazy travel month, but I'll keep you updated. And as always, my goal is to help you navigate these markets. I have to navigate them too for my own portfolio. So we'll do it together, shall we? Here's what happened today. Big time digestion day, right? So a digestion day is what we call when you've had a big move. In this case, Monday and Tuesday were aggressive up days, particularly in the technology sector. Obviously, a significant move higher on Monday and Tuesday. Today, a big time pause. It's kind of like you hit a pause button. Think of it as like you've eaten the big meal and then you need a little break and you're kind of just digesting. You're not really making any progress, just kind of processing what's happened so far. That's what today looked like. We had a higher open. If you can see, we on an intraday basis made a new all-time high above 7,700, almost got to 7,800, but didn't quite do it. But then in the first couple hours of trading, we basically went right back to Tuesday's close. The remainder of the session was pretty much sideways. All the major indexes rolled over just in the last like 10, 15 minutes. But, generally speaking, this ended up being a pretty flat day. Now, underneath the surface, there are quite a number of stocks and groups that did not do nearly as well and rotate over a little bit. But I would say at the index level, certainly technology kind of stalled out. Got a lot more earnings to talk about here again today. So I did grab some charts. Western Digital, SanDisk, both reporting after the close. We'll check in on those after the market. When we get to the chart review, that is a little bit later. So S&P closing down just less than 0.25%, 77.23 and change there. Mid caps and small caps both underperforming. The S&P 600 small cap index was pretty weak, down about 1%. So it actually opened weaker and then just continued weaker through the course of the trading day. So it's been a while. We've been seeing small over large be a general theme through the course of 2026, and a general theme here recently as well. Even in July, small caps did a little bit better, but today flipping that, right? Large caps over small caps. The Dow is actually up 0.5%, so that shows you that it was really more of the growthy stuff that kind of dragged things down, particularly technology and communication services, which are much more represented in the like the NASDAQ than the Dow. That's why there's that, that kind of spread in performance between the two. Volatility remained very low. It's kind of a weird VIX day. And I don't know if that was a bad print or something, but it looked like the VIX spiked briefly higher. And it was something that caught my eye, but went right back to normal. And by the close, VIX kind of drifted down through the course of the day and finished just below 16. So stocks generally retreated slightly, more flat than anything at the index level, volatility remaining fairly low. So that's why we describe this as more of a digestion day, more of a kind of pause that refreshes, and then we see what happens when we do this again tomorrow morning. Rates generally kind of drifting lower. Bonds have been pushing a bit higher this week, bringing the 10-year yield down to just about 4.6%. The long bond yield below 5.2%. So not huge changes, but generally coming down a little bit. The TLT, which is a Treasury bond ETF, was up about 0.25%. The dollar continuing to weaken, and that weaker dollar is helping. I mean, part of the reason why like gold and silver are doing so well, both of those actually had pretty strong days. And I would say gold now breaking above that trend line finally that we've been talking about for quite some time. I actually added to a gold position earlier today. Haven't been doing that in a while. I haven't even been thinking along those lines. But as I mentioned, right, the way that I use charts is, all right, here's the setup. It's a downtrend. We're below this trend line. We break above this trend line, I'll take a little bit, more of a position. So that's what we did earlier today. Looking at the commodity space, you can see gold and silver both up over 4%. This is looking at the futures market. We usually use the GLD and the IAU, both of which I have positions in, but all up about the similar amount because those are the ones that basically hold physical gold. So they're pretty highly correlated to gold spot rates. Crude oil prices were down in the U.S. by about 1%. Brent crude was basically flat today. But both of those kind of stopping. They've been, very weak after the news over the weekend, particularly Sunday, that, very close to a peace deal. And we've heard a number of more, sort of headlines implying that we're very close to some sort of meaningful agreement. Still waiting on the confirmation of specifics of what that might look like. But crude oil prices, which have been coming down pretty aggressively on Monday and Tuesday, not surprised we have a bit of a pause. So even while stocks paused, kind of crude oil paused after pulling back below $80 a barrel. So the U.S. crude benchmark down around $75 a barrel into today's close. Looking at the cryptocurrency space, pretty interesting, particularly the more widely followed coins like Bitcoin, just below 65K as we're going live with the show. Ethereum up above 1900. So both of those in the green, the rest kind of mixed. But overall, I would say the chart of Bitcoin, I mean, it's not out of the woods yet, but it's just kind of, sort of rotating higher a bit. 67K remains that key level for me for Bitcoin. Looking at the 11 S&P sectors, by the way, I had a really good interview a couple hours ago with Kevin Abbott. Kevin is one of my former Fidelity colleagues. He now is a sector strategist at State Street in Boston, State Street Global Management. So the asset management side of State Street. And really good conversation about AI because he focuses a lot on technology and communication services. But then we talked a lot about sector rotation. The S&P or the State Street, S&P sector spiders are obviously pretty widely followed and very liquid. But we talked about just sort of the message that you get from looking at different sector rotations. Talked about correlations. Talked about a bunch of different things related to sector investing, which I thought was really interesting. So that's with my editor. Hopefully, we'll get it out to you here very soon. So two really good interviews this week. That I'm excited to get to you very shortly. The last episode that is out, by the way, was with Mary Ellen McGonigal. She is a fantastic stock picker and a great market practitioner. I'd encourage you to listen to that and all the episodes while you're there on our YouTube channel. Also, anywhere you get your audio podcasts. All right, with that in mind, here's what happened with sectors today. Pretty much a coin flip, right? You had half of them up, half of them down, essentially. On the upside, healthcare and materials, two kind of old economy stocks, sectors. Materials really more like basic materials types of things. Healthcare a little more service oriented, but both of those up about 1.25%. Those are the best performers. Consumer discretionary up just under a third of a percent. So the XLY is number 3. Amazon, a bit of a bearish candle structure. We might dust off the old candle quiz. We haven't had one of those in a while. I've got a chart to show you here in a few minutes. I'm sure some of you caught this. If you watch the show enough, I often look for those candle patterns, and I know a number of you are pretty well learned with some of those patterns. I don't know if I'm going to trick you with any of them, but it's good to just keep reinforcing. So here's the damage, though. Even though crude oil prices were down slightly, energy, which has actually been down a lot less than crude oil this week, continued to go lower, so down 2.1%. There is some earnings in the energy sector, by the way. As well. Communication services and utilities, number 2 and number 3, both down about 1%. I mean, the kicker, though, and I feel like Technology should be like in a bigger font or all in caps on this table, because in terms of a tabular representation of the sectors, it's kind of tech and then everything else, as you probably know. So technology being down 0.5%, that's really weighing on the S&P and the Nasdaq, which are obviously heavily weighted to technology. All right, looking at the breadth data, not a great breadth day, particularly in mid and smalls. So in the small cap S&P 600, the mid cap S&P 400, about a 2-to-1 ratio of decliners over advancers. A little more measured, or a little more neutral, I would say, in the S&P, 49% advancers to 51% decliners. On the New York Stock Exchange, a little more negative, 41% advancers. So the breadth has actually been pretty good now for a while. The McClellan oscillator back above zero. As we've often said, is a key short-term measure of breadth, and that turning back positive going into this week was a pretty encouraging sign, at least in terms of short-term market sentiment. Today, kind of the opposite, right? We're getting a bit of a pullback in some of those breadth readings. Both the bullish percent index is now above 70% for the major averages. As I kept one of those charts in there for you. All right, looking at the Morningstar style boxes, what we call the market factors. Small cap, certainly the worst place to be on today's session. The small cap value core growth down like 0.9 to 1.1%. On the top, though, large cap definitely better, but all down, right? All 9 of these were down, but the large cap ETFs were basically flat today. So large over small was one of the key themes today. No real differentiation, right? If you look at the value column versus the growth column, pretty similar in terms of the percentages. If you look at the core column in the middle, right? Value versus growth wasn't a key theme today. It was more about large over small, and then some of the specific sector themes that we talked about. All right, looking at Dave's Dirty Dozen, not a great day for this group of leading growth names, although NVIDIA managing to get a win today, making a new swing high potentially. I actually didn't grab that chart, so let's look at that really quick. Yeah, so NVIDIA, hey, let's celebrate the fact that NVIDIA is finally breaking out of this range. NVIDIA has been in a sideways, what we call a consolidation phase, trapped between resistance around 213, support right around 190, and that's the lower end of this range, also a key Fibonacci level. Yesterday, we reflected on it trading back up to that resistance. Today, we're gapping above there, which is pretty encouraging. Do we get follow through tomorrow? That's the question on a chart like that. But pretty interesting breakout there for NVIDIA. Apple up about 0.5%. Apple's been dragged down here recently, kind of chopping around that 300, 310 level since the gap lower last week. On the downside, SpaceX, I already see some comments about SpaceX in here. Yeah, it's down another 13, 14% today. So again, I mean, sometimes the market surprises you. Sometimes it's almost like it's just coming right out of a textbook on things to expect in a big tech IPO. Like, this is exactly what I would think. I mean, it's just so much like the Facebook IPO. And there was just, and again, it's like what I remember is from then, and I remember from now earlier this year, there's like such an expectation. And everything you read talks about how transformational this company is going to be, and all of that can be true. But what we always have to remember is a good theme and an encouraging future state doesn't necessarily mean the stock is a good buy today. And the problem with an IPO process is there's a ton of excitement, even a ton of euphoria that is all kind of rustled up and encouraged and promoted and celebrated to get everyone excited about this IPO. And it's just setting it up for a huge rug pull. And so I think that's, certainly what we've seen, a couple days ripping higher, but then quickly coming down to the IPO price, and now well below, right? It's well underwater the IPO price, which is 130. We open trading around like 135, open trading around 150, if I remember right. I think those are the numbers. Obviously the lockup period is opening up. And so tomorrow, a bunch of shares becoming available, investors seeing that as a pretty negative sign, even though the earnings were pretty encouraging, certainly. And the long-term thesis seems really compelling. Like, is this a transformational thing? Yeah. But for now, I mean, the trend is nothing but bad. And I would say from a technical perspective, very little to get excited about. If you're buying SpaceX today, and I don't blame you if you are, like, I get the long-term thesis. For me, buying in a position of severe weakness means I'm optimistic about the long-term story. And I'm so optimistic that I don't mind getting dinged in the short term for the opportunity to build up a long-term position. And if that's your intention, I don't mind that. But let's be clear about our intentions when we're buying into a chart that is clearly making lower lows 1 week and 1 day to the next. Let's not be under the illusion that it's a good chart setup. At some point, the chart starts to improve. I'll keep an eye on it. I'll let you know when I see that. I'm not seeing that today with the stock down quite a bit. Alphabet we'll come back to. That's another kind of rough candle pattern, down about 4% today. And you've got Tesla and Amazon both down about 1.7% today. So, obviously pretty decent day for NVIDIA. Other than that, kind of a rough day for leading growth stocks, coming down quite a bit. All right. As a reminder, we're live streaming on Facebook, YouTube, and X. Those of you checking it out live, welcome. Thanks for coming by. Thanks for asking questions, dropping comments as we go. I can see anything you're saying on those platforms through the live stream platform that we're using. I will do my best to grab a question or two before we finish the episode. Any of the questions we don't get to, we'll put them in the mailbag for Friday's episode. And if you're watching this show later on YouTube, thanks for checking it out. Please feel free to like it, subscribe, share with 1,000 of your friends. All of that would help a great deal. But most importantly, drop a comment with any questions that you have. Would love to hear from you. All right, here's what the heat map looked like. I mean, not a particularly good day, and you realize how NVIDIA with the nice update was pretty much an outlier today, right? Particularly in the growth sectors. So if you look at technology, look at communication services, you look at the big parts of consumer discretionary, a lot of red, right? So NVIDIA in the green, but pretty much all the other sectors that I mentioned, the biggest names are kind of flat to slightly to quite a bit lower. And I'm particularly, I would say, wary of the semiconductor stocks. Continue to struggle, right? AMD, Micron was flat, Broadcom was flat. That's good. But AMD was down 7%, LRCX down 3.25%, SanDisk, WDC. These are both earnings names after the close, down 5% plus going into today's earnings release. We'll take a look at those and how they're trading in the after hours. So technology, generally not a great day. And I would say charts like Arista, charts like NVIDIA stand out as positive outliers, kind of breaking above key resistance at a time when most are not. Arista Networks made a new 52-week high today. So there are good charts out there. And this is for me, a great remander to regularly, scan for stocks making new 3-month highs to surface those, ANET kind of charts. Making new 3-month highs. And, while that not necessarily means these are all charts that are good charts to follow or good charts to buy necessarily, but definitely good charts to be aware of. I think that's pretty important. Now, one quick comment, because I do want to point out that in the consumer discretionary sector, while Amazon and Tesla, the two biggest names, the two biggest weights, were down today, pretty much the rest of the consumer discretionary sector had a pretty decent day. And I'm looking at Booking Holdings, BKNG, making a new 3-month high today. I'm looking at some of the hotel names, Marriott and Hilton. I would argue still not great charts. Hilton looks a lot like some of the semiconductor stocks, kind of in this short-term trend of lower highs and lower lows, but it's trading higher today. That's encouraging. So a number of stocks actually looking pretty interesting today in the consumer discretionary sector in terms of today's returns, and looking a lot better, I would say, than at the index level. So that's what happened in the big growth sectors. I would say on the downside, energy, of course, stands out as a big underperformer today. Of course, crude oil prices have been coming down, not down as much today, but energy stocks have not been selling off as much as crude oil prices. So a bit of like a catch-up move today as they move lower. There's some earnings there this week, of course, as with many of these sectors. Utilities also not doing particularly well. And the relative performance of utilities is important because I found that when utilities start doing well, particularly when utilities start outperforming, that can often be a really bad sign for risk assets because it implies that investors are getting defensive. We're not really seeing that here today. What else looked interesting? Financials, I mean, not bad, but just not great. It was kind of like a meh. But I look at charts like JP Morgan making a new 52-week high. I look at charts like Berkshire Hathaway making a new 52-week high. I'm looking at Visa making a new 52-week high. I don't have to go through every one of these names, but these are all pretty good charts. So financials remain, I would say, from a technical perspective, pretty decent trends there to be following. And then in healthcare, Eli Lilly having a good bounce. That's the biggest weight in the XLV. But I'm looking a little further down. AMGN is a name that we talked about. I think it was on yesterday's show because they reported after the close yesterday, I want to say, or before the open yesterday. But earnings went pretty well. Did close above $400 for the first time today, which is pretty good. And then you've got like McKesson having this nice rotation off of the recent lows. So in terms of compelling trends and emerging opportunities, for me, they're generally less in tech and it's more in like the healthcare, financials, maybe industrials. That's where some of the interesting charts are. Materials, let's not forget some of those charts. A number of people often have mentioned the stock picking exercise I did with my friend Tom Boley and others, Grayson Rose, Julius DeKempener. We had a stock picking competition. It started in the beginning of June. I am not doing particularly well. I'm down toward the bottom of the leaderboard. And I would say for me, great opportunity to talk about risk management because a number of the charts I think just went from really pretty encouraging to not encouraging. That's why you cut your losses and get out of them. But we didn't have that ability. You just had to own the basket. But one of the charts that I have in there is Nucor, NUE, which continues to kind of impress. Not a bad bounce today, making a new 52-week high this week. So interesting charts in some of those kind of old economy sectors. And again, if you've been all caught up in the AI ecosystem, I don't blame you. That's where so much attention has been. But let's not lose focus that there are other companies outside of tech and communications with some pretty good technical setups. That's the benefit of scanning and screening, by the way, is we can always surface those interesting ideas to look for. All right, we'll continue on in a moment. I do want to take a moment and give a shout out to one of our strategic partners, Seeking Alpha. They have a new platform called the Quant Growth and Income. One mistake that I see investors make all the time is focusing just on yield alone. But the reality is a really high dividend doesn't help much if it isn't sustainable. So Seeking Alpha's Quant Growth and Income portfolio, instead of simply screening for the biggest yields, they also look for companies with attractive income potential along with strong dividend safety and growth metrics. It's a rules-based portfolio run by Steve Kress and the quant team at Seeking Alpha, updated every 2 weeks with new trade alerts and research. You can learn more about this new product at marketmisbehavior.com/growth income or scan the QR code that you see on your screen. They're giving my viewers 10% off if you sign up for the product here. And again, you can go to marketmisbehavior.com/growth income. Great time to check it out. See if it's deserves a spot in your investing process. And thanks again to my friends at Seeking Alpha for supporting Market Misbehavior. I appreciate it. All right. Here's what happened to the daily chart of the S&P 500. Of course, this week, I feel like the game has changed in so many ways. We've been sort of broken record talking about this sideways consolidation phase in the S&P. For me, that means we patiently wait. We sit on our hands. We wait for the break. And one of these things is going to happen. We either break to a new swing low, which we did not see, or we break to a new swing high, which we finally got. Monday was the rally up to resistance. Yesterday, Tuesday, was the follow through above resistance or the push above resistance. Today, did we get follow through? Unfortunately, we really didn't. We actually get a bit of a pullback day, a bit of a consolidation day, a bit of a wait and see day. So here's how I think of a chart like this. It has had the break and we just didn't get a good follow through day. Now what we want to think about is, look, the fact that we've broken out on the surface is pretty encouraging. So what I'm waiting for is to see if we get some sort of rotation higher. And I got a question related to this, I think on Friday's mailbag episode, maybe it was on Monday or Tuesday's episode. So if we pull back a little bit, the resistance that we've been focusing on here for quite some time, 7,600, that resistance, I would argue, becomes new support when you have the breakout, right? So when we break higher, if my thesis is we've now broken out of this range, and I think we're going a lot higher, that means if we break below 7,600, then that thesis is busted, right? Because we're no longer breaking above resistance and sustaining that break. So for me, anything above 7,600 is probably okay. Great would be we continue to, make progress to the upside. We did make a new high today, but we closed down at the lows of the day. So it wasn't much of a good follow through day. So I would say at this point, we watch 7,600. If there is more of a pullback through the course of this week, let's make sure we hold that level of support. If not, then we're back in this consolidation range. This is considered a failed breakout. We kind of reset and reevaluate this trading range. But what happens a lot of times, and this is a well-trodden path in technical analysis textbooks, is you have a breakout of resistance, you pull back to test the breakout level from above, and that sets us up for the next move higher. So if dip buyers come in on a pullback down to 7,600, that is one of the most sweet and consistently documented patterns in the technical analysis toolkit. Resistance is broken out. We pull back to the breakout level. we set the higher low and we go higher. So that would be an ideal situation from here. For now, the momentum is pretty good with the RSI holding above 60. So that's encouraging as well. Breadth indicators, as I mentioned, sort of mixed depending on which ones you look at. In the short term, McClellan oscillator pretty good. In the long term, things like the stocks above key moving averages in pretty good shape. This is the bullish percent index on the S&P 500. Just want to note we're above 70% on the bullish percent index on the S&P and also for the NASDAQ 100. Is that a negative sign that we're kind of overbought? Not necessarily. If you look back in history when the bullish percent indexes get up to 70%, that often happens at the beginning of a much larger advance, right? And so it's not a bad thing that we get up to that point. When we start coming out of that overbought region, when we start to get nowhere near that overbought region or the 70% level, that's where we want to start to be concerned. So for me, breaking below 50%, that's one thing I would look at in this particular indicator. But overall, the fact that we've gotten up into this point, I think just speaks to the breadth and the participation in this uptrend that we've been observing, right? The stronger breadth indicators are, and certainly if the bullish percent index can remain elevated, that would be the ideal situation. That's what we saw during previous advances in 2026, certainly in 2025, and in previous cycles as well. Volatility remains quite low. Again, I saw like just a quick spike up to like 18.5. I don't know if that was a good print or not. But on stock charts, which is my main charting platform, I saw that just quick spike earlier in the day. Overall, though, volatility remained fairly low, and the VIX closed below 16 again for the second time in the last week. So VIX down around 16, 15 or 16. That's pretty strong, right? That's a pretty strong bullish position to be in. Anything above 20 is a warning. Anything down around 16 basically says low volatility options markets, telling you not much to be worried about just yet. All right, here's the chart of gold, and I want to highlight this just because we've been following this chart for quite some time. I'm drawing a trend line now. Is it a perfect trend line? Like, no, like we have to kind of cut through some of these highs. I'm just kind of crudely drawing to show how these previous highs, from going back to, January, basically they're all kind of right around this point. And so for me, trend lines are sort of a visual representation of the pace of the decline, right? The pace of this steady decline in prices. Now, as we've mentioned recently, gold has gone from a clear downtrend or a clear distribution phase to more of a sideways trend, right? In the last 5 weeks or so, we've seen gold stabilize. This is the GLD we're looking at. Spot gold hit support right at $4,000 an ounce and literally just has not gone below there. And then finally today we're seeing a bounce higher. Dollar's coming down a bit. That's probably helping gold and silver. That's usually an inverse relationship. But for me, this surge higher is pretty encouraging. Now we're above trendline resistance. Now we're above the 50-day moving average. That's enough for me to take a nibble on the IAU is what I added to earlier today. But I also own some GLD in different accounts. This support right here is kind of the level that I would be watching. So for me, that's kind of the natural stop to that kind of new play. What I'm betting on is we move up toward the 200-day moving average. Ideally, we go even further, but we get below that level, which would be around 365 on the GLD, about 4,000 an ounce on gold would be pretty negative. Larry, great observation. You need follow through as always, right? Standard rules apply. Here we have the gap higher. Do we get follow through tomorrow, right? On Thursday's session, we see further signs of accumulation. Always a good sign. RSI right at 60, so getting a little above that would be a nice confirmation as well. All right, we're going to look at a bunch of stocks here because there's a lot of earnings going on. I just want to hit on a number of things, but I just want to start with the semiconductor ETF. As I've mentioned to you guys a number of times, with my premium members, we use the market trend model a lot more heavily than I do on the show. And our monthly chart review, which I just did earlier this week for August, we apply this methodology to a bunch of different ETFs as a way of tracking strength and weakness, as a way of making sure that we recognize where the opportunities have been and that we are trend followers and acknowledging where the strength has been. So this is applying my market trend model, not to the S&P, which is what we usually do, but to the SMH, the semiconductor ETF. Same way to think about it, right? So the short-term model has been bearish pretty much entirely since mid-June, and that's because of this pullback. This is the weekly chart of the SMH, because of this pullback that we're seeing right here. The medium-term model has been generally trending lower, still technically bullish, but just barely. And then here's the long-term model, which remains pretty positive. So what do these three things in combination mean? So the long term's bullish, which basically means the secular trend is still quite strong. We're still making higher highs and higher lows on the weekly chart. Still a good long-term chart. In the medium term, which for me is the main one that I use for for positioning, is still technically positive, but it's kind of neutral, right? It's about as almost negative as we can get, besides actually turning negative. So for me, medium-term model sort of on a red alert to see if we rotate lower, and if so, I think that'd be pretty bearish. Now, the short-term model has been negative for about 6 weeks now, which basically says tactical pullback within a long-term uptrend. We start to break the zero level on the medium-term time frame. This is where that starts to look more like a broader decline, or more like a more significant pullbacks. But that is kind of how I'm seeing the chart of the SMH. And again, my market trend model just kind of summarizes those trend conditions on 3 time frames on the weekly chart. That's what it's saying right now. Short-term trend, pretty negative. Medium-term trend, neutral. Long-term trend, quite bullish. And that's exactly how I would see that space. All right, it's Alphabet. Here's your candle quiz, maybe one of a couple. Here we have a classic candle pattern. I mean, this is probably one of the more common candle patterns that I try to teach people. And there are literally hundreds of different candle patterns, 1, 2, and 3 candle patterns that people follow. The question is, what is this one? This is one of the more common reversal patterns. This is one that I encourage people to just kind of review so often that they just kind of jump off the page. And that's my goal with candle charts. I don't want to spend a bunch of time like analyzing and like writing out the patterns and where I'm seeing them. I just want to see it and have it quickly register, okay, that's a blah. That means probably a short-term reversal. And I see some comments coming in. Engulfer, I don't know if I can give full credit for that, Floyd. That's I think what you meant was a bearish engulfing pattern, but I'll give you credit for that. Okay, I'm feeling generous as the judges say, okay. That is called a bearish engulfing pattern. I think you knew it. Bearish engulfing patterns are where we have an up day and then a down day. Day 2's open to close range, what we call the real body of the candle, engulfs day 1. That's why it's called a bearish engulfing pattern. If you see the opposite as a low, that's a really bullish pattern, right? Because if you'd have a big down day and then a big up day, implies short-term upside reversal. This, unfortunately, shows a short-term downside reversal. Now, yesterday on the show, we talked about how there have been some bearish candle patterns on charts like Amazon, and I think might have been showing Amazon's chart when I mentioned this, but Alphabet, the same thing, right? Look at this test of the 50-day moving average. This is from about 3 weeks ago. We had the up day, the down day, same bearish engulfing pattern. Ended up being about a week of a significant pullback, right, from around 350 down to 315 before it eventually found its footing and rotated higher. I'm not saying that this definitely says another one of those pullbacks, but certainly implies that the optimism we saw on, really Friday last week and then Monday and Tuesday being met by some sellers today. And that short-term reversal suggests the next 1 to 3 bars are lower. So that implies actually a failed breakout above 372. And that's what we're looking for, right? Can we clear the June and July highs, which are all right around like 370, 375? Here we get right above that level yesterday. Instead of getting upside follow through, we're getting a bearish engulfing pattern. So bearish rotation, unfortunately, for Alphabet. Same pattern. Not quite as obvious, I would say, but still pretty good. Up day yesterday, engulfing pattern today. So both Alphabet and Amazon giving bearish candle patterns today. With Amazon, it was overbought on the gap higher. We highlighted that attempt to get to a new 52-week high. Unfortunately, yesterday with a bit of a pullback, and then today, sellers coming in through the course of the day. So while the benchmarks are relatively flat, I would say underneath the hood, some of these growth names had some pretty rough deterioration. So 2 bearish engulfing patterns to highlight for you. All right, we do have some earnings to debrief on here. Again, after hour session is not, I would never make an investment decision based on the after hours trading. For me, these are more indicative prices. If you remember, like indications of interest, IOIs, I don't know how much those are actually used anymore, but back in the day, they were a huge source of investor sentiment. And in my Bloomberg days, we had great real-time IOI data from all these different, market players. And it was really helpful to just sort of see, moment to moment how the sentiment was kind of fluctuating by looking at like the NYSE order book and looking at indications of interest and all these kind of just, short-term kind of trading reads. But having said that, after hours trading, I would say is very valuable for just gauging some initial reaction to earnings And more often than not, what happens the next day usually follows through with what we saw in the after-hours session. Not always, because news can happen before the next open, but still something to watch. So AMD did report after the close today. I mean, the chart of AMD, I mean, it looks toppy, right? It's sort of the non-technical way I would describe this chart. It just looks toppy. And the reason why it looks toppy, I would say, is because we've gone from a clear pattern of higher highs and higher lows to a pattern of lower highs and lower lows. And that's where I hope you get to watching my content and hearing me talk about charts. We want to get away from the amateurish, it looks toppy, to more of a clearly articulated technical thesis. Why does it look toppy? And if you find yourself kind of summarizing, well, it looks toppy, why does it look toppy? And so it looks toppy because we're going from higher highs and higher lows to lower highs and lower lows. And so that shift is why it actually visually starts to show you that. And point of order, someone just mentioned this. You're absolutely right. Sorry, AMD was reporting yesterday. I didn't update my label there. They reported yesterday after the close, down 7% today. And so I think the problem I have, or I guess the concern I would have with AMD, and this is with semiconductors in general, but we saw on the weekly chart of the semiconductor ETF, the short term's been pretty negative, right? It's been coming off, and a lot of charts like Micron, like AMD, and others have that kind of lower highs, lower lows patterns coming off of the previous high. It's now below the 21-day and 50-day moving averages, gap down today by about 7%. The problem was earnings could have been a catalyst to break that kind of toppy looking pattern, that rotation. We didn't get it. And unfortunately, it's like, now what's going to make the stock start to rotate higher? So I would say for me, this feels more guilty until proven innocent, making lower highs and lower lows. I'd want to see that pattern break to really get excited about it. SPCX, we saw yesterday, of course, kind of pushing up, got right up literally to the 21-day EMA, which is the first moving average we can actually track on the chart of SPCX. But today, giving all of yesterday's gap right back to the market gods, making a slightly new closing low, close the day around 108 and change. So I would say with tomorrow's lockup expiration and a bunch more supply of shares, not seeing a lot of reason to get excited about this chart from a technical perspective. Can we debate, colonizing Mars in the next 5 to 10 years and what the company could do? That is a fascinating water cooler discussion. But as a technical analyst, I'm not seeing anything to get excited about just yet. Palantir, yesterday, great gap higher. I mean, blowout earnings. I mean, hard to imagine a better earnings result than what we saw from Palantir, kind of reinforcing the fundamental story on something like Palantir and where they can fit into this AI ecosystem. Today, not much of a bearish candle pattern, but just no follow through, right? So yesterday we saw the close above the 200-day. The question was, do we get follow through? Today we really didn't. We actually closed near the lows of the day. So we saw that with the S&P. We're seeing that here with Palantir and other names as well. The problem here is that kind of 160, 163, that's the resistance from February, March, again in March, and then here in beginning of June, we kind of got right back to that point and then pulling back a little bit. So holding the 200-day, I would say on this chart, pretty important. If we fail to do that, all of a sudden Palantir looks a lot less encouraging. But for now, we need to see if that breakout holds. No follow-through date yet. So today, so I think we have to wait and see. All right, these are two names that definitely are reporting earnings: Western Digital and SanDisk. And let's check in on Western Dig first. Oi, down. Oof is what we say in the technical community when we get that sort of result. Does not look to be a good result. Western Digital down 11.5% in the after hours, down about 459. Let's see where that is. So that's actually not down a ton. I mean, that's down a ton on a percentage basis, but that's still like right there. So again, what's happening with these companies that are not having great earnings, they're not breaking down by any technical definition, right? I mean, the support here is at 450, I would say. 430 to 450, right? That's the swing low there. That's a beautiful kind of hammer candle. You might call that a dragonfly doji candle if you really want to get into it, with the open and close almost identical. No upper shadow, long lower shadow, but it's a nice upside reversal. But then we stall out at the 50-day today, and now it looks like we're going to be going to have some earnings disappointment to go lower. So what's going to happen on the chart of Western Digital, you're kind of settling into this sideways pattern, kind of like what Palantir has been. And you have clear resistance and clear support. And the question is, which one of these breaks. Chart of the S&P broke to the upside. Looks like Western Digital is not going to do so. SanDisk, I did not grab that chart, but they're reporting as well. They're down also, down about 6.5% to 1262. But again, that's like right in Monday's range, right at Monday's close. So these are down a lot on a percentage basis, but I would say the technical configuration doesn't look like it's going to change much at all. I don't think we got any answers here from earnings, but more just reinforcing that these are stocks that are no longer in an accumulation phase. At best, consolidating. At worst, continue to show some weakness here. AMGN reported earnings yesterday, up about 4.5% today. We highlighted this on the show with the nice setup going into earnings. Just a nice break to the upside. Let's see if we get some follow through on this break above like 385, 390. But overall, I would say strong chart. That's obviously in the biotechnology group. Moving averages in the proper order, all sloping higher. That's great to see. Disney reported earnings before the open. I don't own a lot of individual stocks as long-term holdings, more tactical plays sometimes, but Disney is one that I have. Disney and Berkshire are two that I have in a portfolio just in terms of disclosure. And so Disney looks like earnings were pretty good. And what was interesting on the summary that I read about earnings, well, I think they reported before the open today, but one of the side stories I read about earnings, the experiences group, which is like the theme parks. What else would be included in there? Like the cruise lines, probably like the resorts. I would think probably like a lot of the merchandising is in that experiences thing, I think. But that particular area was up about 20% from the same quarter last year. So, I mean, and again, even with concerns about, non-U.S. citizens traveling to the U.S. and some of the immigration challenges and that we've been dealing with here in the U.S., I mean, they're still reporting some pretty blowout results. So Disney gapping higher today by about 3.7%. Chart of Disney has been not particularly strong, obviously, for quite some time. The last 12 months have been pretty bad. And if you look back, the previous all-time highs in July of last year and all the way to July of this year, it's gone down from about 120 to down, what do we say, around 92, 95. So this has been a pretty big, sort of slow, steady decline. We've gone below the 200-day moving average and actually had a failed attempt to break out there in early May. What's interesting now is if I draw a trend line from like the first two highs, that connects pretty well with the November peak of last year. Then we have a couple times where we kind of had these false breakouts above the trend line. We retested it in June, and now today we kind of gapped higher right up to that trend line. It's a bit of a doji candle today, like not a big accumulation candle, more of a sideways candle. So in this one, you want to see it get above the 200-day moving average. I think a valid break above the 200-day would cause me to be a little more optimistic. I like the fact that the RSI is pushing just above 60. It's pretty encouraging as well. DoorDash, ticker DASH, we highlighted. They're reporting after the close here. Up about 1%, not too bad. It's around 209. So that's just not too high above current levels. This is one that's come up recently on my new 3-month highs list. I actually featured this on my weekly show on Stock Charts TV earlier this week, highlighting 10 charts to watch in August. DoorDash, pretty sure I remember correctly, was one of those 10. Nice break above the 200-day, and for now, it looks like earnings are going to be able to continue that uptrend. McKesson is one more I wanted to highlight. It's up about 2% in the after hours. That's another earnings name today, up 5.6% today going into the close, back above the 200-day moving average, which is pretty encouraging as well. So it's so fun. It's like looking at, I mean, while we see the semiconductor stocks generally, sort of chopping around, kind of drifting lower, you have names like Western Digital, which again, it's like you'd be hard pressed to find a better chart, I would say, out there earlier this year, right in the second quarter. All that's changed now. And what's interesting is there are charts like McKesson and DoorDash and Bank of America and others that are just taking these new leadership roles and starting to rotate higher. For me, it's a great reminder that leadership rotation can be very easy to identify if you have a consistent process of finding those names. All right, I've been long-winded today, so I've got time to take like one question, and that's about it. And then we got to call it a day. Anything we don't get to, by the way, I will put into the mailbag, and maybe we'll answer your question on Friday's show. XBI is the biotech index. I did talk about AMGN. But I don't look at XBI too often. There are two ETFs that track biotechs. I usually look at IBB, but XBI, I don't mind them. The weightings are different. Some of the holdings are different, but I generally think of those interchangeably. And you're saying, does it signal a short-term downtrend reversal? So I mean, I would say on the chart of biotechs, it's like, think of it in different time frames, right? And I would, go back to that market trend chart that I showed you on semiconductors. Kind of a similar vibe here, right? The pullback has been on the tactical time frame, right? So we're seeing a rotation lower from like 165 down to 145. We broke the 21-day EMA, which for me is like an initial sign that, okay, the trend is starting to change. But we're now bouncing off of the 50-day moving average. So we're holding that second moving average. That's good. This to me feels like a tactical pullback within a much longer uptrend. What would change my opinion on that, right? So think about the dynamics of this pullback. Stock pulls back to the 50-day moving average. RSI holds 40. And that idea, right? The idea of the range in the RSI can be pretty helpful because it can, for me, helps me differentiate a tactical pullback within an uptrend versus a big breakdown. The big breakdowns don't hold moving average support, and the big breakdowns often see the RSI break below 40, which tells you it's more of a broad distribution because you have a lot of negative momentum. This one, for now, still feels like a tactical pullback within an uptrend because we're still making higher lows. We're still holding moving average support, and the RSI is still holding 40. So that's how I would think of it. Some of the questions I see in there I'd love to get to, but we got to call it for time. My name's Dave Keller with Market Misbehavior. Thank you so much for watching the show live. Thank you so much for watching the show on YouTube. Great to have you here. We will be not doing a live show Thursday, Friday, Monday. I've got to do it on recording to get around travel schedules and soccer tournaments, but I will be sharing some observations when I can. I wish you all breathing clearly and thinking clearly in a period of market volatility. I'm here to help you along the way and also to remind you it's always a good time to own good charts. Take care, folks.